NWSOFA stands for Northwest Suburbs Organizing for Action. We were started about 11 years ago, right after the 2012 Obama second term election. And I think we had 7 people. Fast forward to today, we have pretty close to 5,400 in our membership, which is really quite amazing. It's been a little bit of an up and down ride. The one thing I'll give to Trump is after he was elected, we had a huge boom in our membership, mainly women that joined us. We cover 6 township areas out here in the northwest suburbs. That's the land beyond O'Hare. We are one of 5,100 NWSOFA chapters nationwide, and we try to present these programs on a routine basis. We have 24 all-volunteer leads that arrange these programs that you see. We have 10 different issue teams. Tonight, this is the climate change team, and Mark Lundholm is the host of, or that lead of that team, and he's the one that's arranged Alex to present to us. In the next couple of days, tomorrow night, we will have Restore Our Democracy doing a Zoom presentation at 7:00. We'll be talking about Biden and Trump, the matchup. We'll be talking about economy, both sides. We'll be talking about the polls that are out there now and how they seem to be moving around. And we'll be talking about what to expect at the debate on Thursday night. So it should be really good. That's going to be on Zoom at 7 p.m. And then on Thursday, we'll be given a presentation at the UUCC, that's Unitarian Church in Palatine. I think that's on Smith Avenue at 10 a.m. in the morning. It's part of their program to understand what's going on. And we'll be talking about the art of persuasion. And I'll be there with a couple of our book club leads to just kind of engage in a great conversation about how that's going to work. And then at 7:30 that evening, we're going to be doing an in-person presidential debate party over at the Greater Palatine Area Democrats / Wheeling Township Democrats office on Northwest Highway, just east of the old racetrack. So it's a kind of exciting thing. Yeah. So if you would like to officially now introduce Alex, we can begin the program tonight.
Take it away. Yeah. Thanks everybody for coming. This program is about trying to change things for the better, climate-wise and otherwise, by putting our money where our feelings are. And so I've asked Alex Papadopoulos to come on and talk about ESG and SRI and sort of what's happening in that. It's being beat up by various people, including our wonderful gymnasium Jim Jordan, who was spouting off a bunch of stuff saying how, it's grooming and it's actually decreasing people's retirements and it's colluding. There's collusion finance. So anything Jim Jordan is for, I'm probably against. I heard anyway. But I'm going to ask Alex to talk about himself a little bit. And so take it away, Alex, and let us know your thoughts. We'll have put your questions in chat or go on the reactions thing. I think you can put your hand up if you've got a question. So Alex, it's yours.
Thank you, Mark. Yes, thank you for having me. I'm excited to be on today, and I look forward to doing more presentations. So just a little background about myself. I've been a financial advisor for 25 years, and I started my career here in Evanston 25 years ago. Early on in my career, I would have people that would come in and ask me to invest sustainably for them. And 25 years ago, there were not as many options as we have today, but there were options. And so this was something that I've started doing 25 years ago. It's something that I was passionate about back then and continue to be. And it's been very interesting to see all of the changes that have happened and the growth that's happened with sustainable investing. And so, one more thing, I have what is called the Chartered SRI Counselor designation. So that is the Chartered Sustainable and Responsible Investing Counselor designation. It's issued by the College of Financial Planning in partnership with the USSIS, which is the United States Sustainable SIS Forum, and they have issued this designation for those financial advisors that are interested in attaining it. Just to give you an idea, there's about 300,000 financial advisors in America, and there's less than 2,000 of us that have this designation. So there's not a lot of advisors that have this, but the numbers keep growing as people become more aware of sustainable investing. So I'd like to present to you my presentation for sustainable investing, and if we have questions during or after, I'm happy to answer them. Bill, are you okay if I share my screen now? Okay. So let's talk about sustainability. Most of you know what sustainability means and what it is, but our definition is that sustainability meets the needs of the present without compromising the ability of future generations to meet their own needs. And with that, sustainable investing can be profitable while at the same time create positive change for humanity and the environment. So sustainable and responsible ESG portfolios, they can be used in all types of investment accounts. So you could do sustainable investing in a Roth IRA, in a traditional IRA, in a trust, in an endowment, pretty much any type of investment account that's out there, you can do sustainable investing within that investment vehicle. Now, when it comes to sustainable investing, we have what are called filters, where we can filter investments to make sure that they're in line with what we're looking for as sustainable investing. And so the acronym that's used is ESG. And ESG analysis is the underlying factor in all sustainable investing strategies. And ESG stands for environmental, social, and governance. This is where we have a set of standards to allow for socially conscious and sustainable investors green investments.
There's a lot of background noise. Can everybody please mute?
Give me some information. All right, see.
Okay.
Thank you, Jim.
Let's look at the first acronym, environmental. So with environmental, we're looking for companies to consider their contributions to climate change, to energy use, pollution, wasting materials, damage to forests, and harm to wildlife and their habitat. S, social. So when it comes to social criteria, we're looking for ways that investors will evaluate a company's stance on human rights, political matters, community engagement, their commitment to the health and safety and well-being of its workers, and just as importantly, the community at large, their labor and employee relations, and then policies and practices on using child or forced labor. If we move to D, governance, we're looking at risk and opportunity factors taken into consideration, including a company's business ethics, board structure and independence, diversity of leadership, their representation of women and minorities on governing boards and on executive level positions. And we're looking for companies that are managed in ethically responsible manners. I think it makes sense to look at the history of sustainable investing. This isn't something that just came up recently. Sustainable investing has been around for quite a while, and we can trace origins back to ancient times with world religions such as Judaism, Christianity, and Islam. They had their own individual practices that were rooted in morality and a direct reflection of their particular religious beliefs. And there's a lot more history within this. I had to pare it down, but there's a lot more to this. But one of the big big ones was in 1872, the founder of the Methodist Church, John Wesley, he gave a sermon titled The Use of Money. And, you know, what he said back then, I think it rings true today, where he said, you know, we ought to gain all that we can gain. This is certain. But what we ought not to do, we ought not to gain money at the expense of others, nor at the expense of our health. And, you know, that's something that rings true today. And I have that here on my desk, and I look at it every day, and it helps to keep in mind, you know, what is the goal here, right? We're trying to grow our money, but let's not do it at the expense of life and the expense of health. In 1928, we had the first public offering of a screened investment fund, and it occurred via the Ecclesiastical Group in Boston. They founded the Pioneer Fund that later evolved into the Pioneer Investment. 1960, I know, Bill, we were talking about young people's reference and how it's such a short reference, maybe 15 years for young people, but it's good to look back to the 60s, where a lot of the SRI strategies were born because of the political environment at that time, that it was related to Vietnam War, civil rights movement, and equality for women. And their main issues were disarmament, fair labor, and the environment. In 1982, Calvert Investments launched the first money market and the first fund to have social screens, which included divestment of businesses supporting the economy of South Africa and its policies on apartheid. And it took a while, but a part of the reason that apartheid collapsed in South Africa was this divestment of business that happened in South Africa from countries outside of South Africa. They put the pressure on them. So, you know, that happened in 1982. In 2006, the Rockefeller Foundation launched an impact investing approach and term that this particular term went on a global scale and is still relevant today. Impact investing is a way to invest in a particular community or for a particular cause, and impact investing is something that we still do today. 2012, Morgan Stanley launched its Investing with Impact platform, and in that same year, the U.S. SIF Trends Report noted that there was $3.74 trillion in sustainably managed assets in the U.S. Any questions so far? No. Okay, I'll keep going.
Question. You just had a question pop up.
Okay, there it is. Let's look at it.
So that's from Sam Cohn. They said, what is the history of those socially conscious investments?
Okay, so Sonny, when you ask what is the history, did I already answer that question, or is there something?
No, I was asking. I was very quick. I meant, what is the performance history? In other words, I understand these things were created, but did they perform?
Yeah, well, great question. And Sonny, you're looking for the bottom line, and I like that. And we're going to get to that. I have some really good information on the performance. So, and let's look at how sustainable portfolios are constructed, just so that we're clear on how these are constructed. And I'm somebody that constructs these for clients of all sizes. We have clients that have Roth IRAs, and then we have clients that have very large accounts as well. And we do the same type of construction for all of them. So all investing starts with asset allocation, and that's just this top box here that we have. The saying is you don't want to put all your eggs in one basket, and so we want to invest in stocks and bonds. We want to have real estate and cash, and to go a little deeper than just asset allocation, we also have to have asset diversification. And so the box underneath the asset allocation box, if you guys can look at this, there is no discernible pattern on this scatter box that's below. And what these colors represent are different asset classes: large cap growth, small cap growth, large cap value, small cap value, real estate, bonds, international, emerging markets. And so anybody that says that they know what's going to be the best performing asset class in any one year, they really don't know. And the way to invest and be safe is to have your assets represented in all of these different asset classes. So that's investing 101 for all types of investing. And then what we do with sustainable investing is we add this additional stream with ESG, where we look at companies' environmental scores, their social scores, and their governance scores. Beyond that, and that this last part is where I get really excited. Is once we've done all of the construction and we've allocated assets broadly, and we haven't put all our eggs in one basket, and we've done the ESG screening, we do have a small percentage that we invest for clients, depending on their risk tolerance, where we can really try to go after sustainable opportunities. And I'll go into this a little more at the end of the presentation. But if you believe that climate change is real, and if you believe that most governments acknowledge this, and we can look at what's happening with Florida and the cost of climate change to the economy of Florida and to the economy of the entire country, right? The Midwest storms are starting earlier, they're lasting longer, the storms are stronger, forest fires, all of these things point to the opportunities that are involved with wind and solar, EVs, and all of the components that are associated with EVs, electric vehicles, all of the charging stations. And there's a growing movement, and we could do a presentation just on this, of electrifying everything. And that's something that I believe started in California. If you remember, about a year ago, there was a big uproar where they changed, we discovered that gas stoves are not good for you. And new construction in homes now, they're pushing for electronic stoves. Basically, whether you believe it or not, everything's going to go electric. And this, to me, represents a strong investment opportunity as well, because we have so much to do in order to switch everything over to electric versus using fossil fuels. And I'll touch on that at the end. Let's just look at some statistics for ESG. Currently, 90% of S&P 500 companies release ESG reports. 30% of investors claim that they have difficulty locating suitable and appealing ESG investing possibilities, despite the market's explosive growth for ESG investment products. So there's people out there that understandably are maybe interested in investing sustainably, but they just aren't finding the correct possibilities that they're comfortable with. And so it's my job and people in our industry's job to keep raising awareness and give people avenues to research ESG and sustainable investing. ESG focused institutional investments are projected to reach $33.9 trillion by 2026. 83% of consumers believe companies should actively shape ESG best practices. That's an incredible number. And what I want to emphasize is that it is consumers that have the power to shape how companies behave. And just by having this conversation, corporations are aware that consumers increasingly want them to think about ESG best practices. Investment funds with adherence to ESG principles hold more than $18 trillion currently, and companies are increasingly prioritizing and examining their environmental impact and enhancement of sustainability. And ESG considerations are considered by 89% of investors when making investment decisions. So the consumers are already ahead of the market thinking about these things. Just a little more information on clean energy. So clean energy investment jumped 17% in 2023, according to Bloomberg. Their particular periodical is Energy Transition Investment Trends, and they found that energy, electric, hydrogen, and carbon capture all drove investment growth year on year. Clean energy grew year on year from 2023 to 2024. China leads the world with $676 billion invested in clean energy in 2023, almost 40% of the planet. But together, the US, the EU, and the UK invested more than China in 2023, which was not the case in 2022. So investment in clean energy supply chain hit $135 billion globally in 2023 and could rise by $259 billion by 2025. And then finally, global investment in the low carbon energy transition was up 17% in 2023 with almost $1.7 trillion. Let me see if there was okay, perfect. So let's talk about our friend Elon Musk, a very controversial figure. If you remember back in May of 2022, Tesla was dropped from the S&P 500 ESG index, and he was very unhappy about that, and he tweeted about that. And at that time, Tesla stock was $253 a share, and as of yesterday, down almost $70 from that point. So this is an isolated example, but maybe it was possible the ESG index knew what they were doing by dropping Tesla at that time. Thus far, it was the right thing to do. And I think actually they've been added back to the index recently, but there's reasons that they got dropped. And so these indexes look for sustainability factors that drive market value for companies. So they're looking at brand value, the reputation of a company, customer satisfaction, health and safety records, and litigation risk as well. So let's get to the meat. I think, Mr. Cohen, you had asked about the performance of sustainable funds. And so on the left, we have a report that was issued by Morgan Stanley, and they did research on nearly 11,000 mutual funds from 2004 to 2018. And their research showed that there was no financial trade-off in the returns of sustainable funds when compared to traditional funds. And during that period, they showed lower downside risk. And when we talk about lower downside risk, that's when the market isn't doing well, and sustainable funds actually lost less money in the years where the market went down from 2004 to 2018. So, anybody that talks about sustainable investing doesn't do well and people are losing their money, it's just not true. And it's not me saying it. These are these major investment firms that are doing real research. And I know that all of you here on this call believe in research, and that's the correct way to come up with answers, not off the cuff answers. To get a correct answer, you have to really research it. And so Morgan Stanley did this project. And what's interesting is if you look on the right side, 2022 was a down year for the market, right? We came off of COVID and inflation was out of control. It was a very difficult year for the market. And in that year, according to Morningstar, the Morningstar Sustainability Index fell almost 19% in 2022. So pretty steep fall. However, it fell less than the parent index of Morningstar, the US large cap mid cap index, fell 19.5%. And during 2022, the S&P 500 fell 19.4%. So the research that Morgan Stanley did held true in 2022, where yes, the market fell and all indexes were down, but the sustainability index actually outperformed the traditional index. So it's interesting to see that. And that's what I've seen in my career as well. And I can go into why this is. I don't want to take up too much time, but generally when companies score well on their ESG scores, it means they have good leadership that's looking ahead. It means that they have diverse boards, diverse leadership within their boards, and they tend to have less litigation as well. You think, a board that's dominated with just men, that you're just not getting everyone's aspect of what's going on in the world. We already know that it's good to be diverse, not only in every aspect of life, but also in business as well. Let's look at more recently. In 2023, according to Morgan Stanley, sustainable funds returned to their long-term trend of outperformance, and also assets under management increased as well. But if you look at the performance in 2023, according to the Morgan Stanley Institute for Sustainable Investing, sustainable funds generated returns of 12.6%, and were almost 50% ahead of their peers in traditional funds that did 8.6%. They outperformed coming mostly in the first half of the year, and investor demand also remains strong, with assets under management up 15% from 2022 levels. And so according to the CEO of the Morgan Stanley Institute, Jessica Alsford, she saw that in 2023, fund returns to their long-term trend, outperforming traditional peers. And this comes off of their survey, where they had individual investors found that a majority looked for both competitive financial returns and sustainability in their investment strategies. So you could look back to 2004, and even in recent history, sustainable funds, not only do they keep up, but they in many areas they're outperforming traditional funds. And so this is where things get fun, and this is a growing movement, this electrify everything movement, where we're looking at making this incredible transition where buildings, automobiles, anything that uses fossil fuels over the next 5, 10, 20 years, they're all going to be converted to electricity. And yes, as we stand today, most electricity that's generated does come from fossil fuels. But if the buildings and cars and other mechanized vehicles switch to electric, we're reducing our carbon footprint. And as we grow out our infrastructure with wind and solar, we're already using less fossil fuel to add to our grid. And so to me, this is an incredible investment opportunity where, you look on the street today, I think the number is about 5% of vehicles are electric. It's just a matter of time. And so this to me presents a huge investment opportunity, because it's not just the US, the whole planet has to make this switch. We're already way behind in terms of climate change. Everyone on this call knows that. And so you will start to see governments mandating this transition. Now, we have an election that's coming up in November, and I'll leave it up to you, all of you, depending on who wins the presidency, this may be dramatically slowed down in the US, and we're the leader in the world. And we know that President Biden made incredible investments in clean energy. It wasn't as large as we had hoped, but he had to get the votes that were necessary to do that. But this is happening. It's just a matter of how long is it going to take. And so this is an exciting time to be on the planet and to be making this incredible transition from fossil fuels to sustainable energy. And so what I'd like to tell everybody is, you might think that your investment account, your small Roth IRA or your large account, whatever it may be, doesn't make a difference, but it does. And we have power in numbers, and it's consumers and investors that drive the economy and markets. And together we can make a difference.
Alex, there are a couple of questions in chat.
Let's do it.
So take a look.
Now, what I'll do is I'll stop the share and let's look at the chat. Okay, so Sonny Cohen, for a balanced portfolio, are sustainable funds a category, or is it a sustainable merely a criteria for looking at more traditional fund categories? Okay, great question. So we always want to have a balanced portfolio, regardless if you're investing sustainably or not. But as we stand today, there are a lot of sustainable investment options. And so you can have a portfolio that's balanced and at the same time in balanced, sustainable investments. And so what you want to do though is you want to make sure that whatever, if sustainable investing is important to you and you want to convert all of your portfolio or some of your portfolio, you want to make sure that you're invested in a sustainable fund. So just to give you an example, one of the popular funds is Vanguard has a fossil fuel free S&P 500 exchange traded fund. That's a great place to start. So you're investing in the S&P 500. You're substituting out companies that are primarily getting their revenues from fossil fuels. So you're making that distinction in your investment, but you're still very well diversified. And so there's a lot of options out there. I'd be happy if anyone wants to shoot me an email or give me a call. I can point you in the right direction and I can help you as well. But if you just Google sustainable investments, you'll find a ton of options out there. And Vanguard is great. All of the big companies have a lot of investment options that are sustainable. George Anastos, greenwashing. Yes, good question. Greenwashing is something that we have to be vigilant about. Companies, as we know, will always try to skirt the rules and say that they're green, and they're not always going to follow the rules. And the only way to do that is to be vigilant. There's a lot of ways to look. If you're looking at an individual company, Sustainalytics.com has really good scores for sustainable companies, and they're updating them all the time. We're not always going to be able to keep out the greenwashing, right? No matter what we do, there's going to be these companies that cheat, but that doesn't stop us from still going forward. And more companies are realizing that their reputational risk is going to be hurt if they're caught greenwashing. So as awareness continues to grow, companies don't want to be on the wrong side of greenwashing. They don't want to get caught doing that. And so it's an ongoing battle, and we just got to keep fighting and keep trying to limit the greenwashing.
Alex, can you explain what greenwashing is?
Yeah. So greenwashing is when a company is not truthful about what they're doing on the sustainability side. So if you look at the letter E and ESG, the environmental side, there's companies that pollute, right? And so they're not always going to be honest about how much pollution they're having out there. And so what's happened though not recently, but this has been happening for a while, but at the same time, you have the government that's double checking these companies on their pollution. And then also the investment firms are also following up on this as well. And so, like I said before, yes, companies may lie about what they're doing. But again, they're going to take a big hit on their reputation if they get caught doing it. And so as we keep awareness out there, companies do not want to be on the wrong side of greenwashing. I hope that helps.
There were two more questions. One about making the slides bigger, but there's one from Ari Pennock about sustainable investing in the marginalized communities. Maybe Ori could come off mute and ask her question.
Well, I know that this is focused on, as it should be, on investors and those of us who are investments in stocks and what have you. But a couple of times the speaker said everything going electric, and a lot of the forecast of the economic recovery or sustainability is based upon this transition to the electric environment, the environmental transition. My question is, if that's what the premise is based on, how do you incorporate in that the marginalized communities that will not be able to afford to make the transition for everything? For example, I know some people, college educated, but not upper middle class, that cannot afford to purchase an electric car. So even if these things, as they should, happen, how do you take an account that many people will not be able to afford them? And so how is the financial reward going to be obtained?
Yeah, great question, Ari. And so the answer is it's going to have to be a combination of things, because we're in the beginning stages of electrifying everything. And if we look at EVs, the EVs that have come out and have become mainstream are still very expensive. I agree with you. And as the technologies get better and as improvements happen, we're going to see costs come down. And what we'll see is that these costs, as they come down, they'll become more affordable for marginalized communities. And what I'll add to that is, as we continue to improve the grid, the green energy grid, if you look at what people are paying for gas in their cars today, $200-300 a month in gas, depending on how much you drive. As we make this switch to electric cars, as they become more affordable, typically people that are charging their cars at home, they're paying anywhere from $50 to $75 a month on their electric bill. And so there's immediate cost savings from switching to a gas car to an electric car. But the barrier, and I agree with you, is that EVs are still expensive. And so what the other aspect of this is that governments and states are going to have to come in and subsidize. And so there are, even today, you do get a tax deduction for purchasing an electric vehicle. Those subsidies have to continue to improve. I think it's $7,500 that you get back for buying an electric car. That's a good start. We probably need that to be higher to encourage people to make that switch. And you will start to see these subsidies come down on the federal and state level. So in order to complete this and get to the finish line, the government will need to get involved, because what happens is companies are only going to offer the cars that they make the most profit on. And those are the cars that are more expensive, unfortunately. And so just by us having this conversation is already a win, because it forces automakers to make those affordable cars available to all people. So it's coming. Change is slow, but as the technology gets better, prices will come down, and also the government will have to step in and help to subsidize this transition that we're having. Okay, anything else?
Mark here, I had a question. So there's no organized outreach to marginalized community because there's no organized, well, the ESG is a sort of acronym, but there's no real organization to it, or is there?
At this time, there is no organized group that's helping marginalized communities make this transition outside of the government, as far as I know. But what I'll say is that as people continue to invest green and force companies to be aware of their practices, that will also allow for marginalized communities to participate in this transition. And so, I'll give you guys an example. Elon Musk, whether you like him or you don't, some of the things that he said do make sense. And so he had talked about a solar farm in the southwestern states that could possibly power the entire country. And so there's large swaths of the country where there's nobody living there in the desert and in sunny areas, windy areas, where private companies and the government could partner to build solar and wind farms that would subsidize our energy costs. And so by bringing energy costs down, that's going to help everybody, including marginalized communities. So, I mean, there's no reason we have all this free energy that comes from the sun and the wind that we're not harvesting it. And so, if you think about how many homes and buildings don't have solar panels on them, I mean, it's astounding. It's got to be close to 95 or 97% of homes and buildings don't have solar panels on there. And so we need solar panels to get cheaper, and we need governments to subsidize that cost so that people make that transition. And so that's why people need to vote and do the right thing so that these things can be accelerated. If you look at President Biden, everything that he did for clean energy was fought tooth and nail by the other side. And he barely had enough votes to pass a lot of these bills that he wanted to pass. So, I mean, it doesn't take a lot to figure out who loses out as we make this transition. It's going to be the fossil fuel companies that are going to lose out. And so I would imagine they don't want this transition to happen quickly or not at all. Now, there are some that are diving in and want to be leaders, and that's great. But in investing and in the markets, there's winners and losers. So if we're going to be switching to sustainable energy, that means we're not using fossil fuels. And so that's life, and that's change. And hopefully we can get there sooner rather than later, because we know what's going on with the climate. Yes, Jim, I agree with you about, I mean, solar panels on the roof is what everybody should have. It's still very expensive. It's a shame that Illinois doesn't have some kind of program to allow for people to do this, but these are things that we could push on and continue to ask for.
There was a question from Bob Caprica. Bob, you want to come off mute and ask your question to Alex? Let me see if I can pick that up. Okay, so Bob had put in chat, can you comment on international ESG investing?
Yes. So internationally, and namely Europe is ahead of the US in sustainable investing. Europe has already incorporated ESG factors into their public pension and into how the governments invest public funds. ESG is something that they're much more aware of in Europe than we are here in the US. So they're ahead of us there. We already know that China is investing very heavily in renewable energy as well. And so when we build our portfolios, we want to have international companies, and we want to have international companies that are investing sustainably. And Europe, Asia, Australia, Canada are all ahead of us in that. So in my mind, international ESG investing makes sense. It's the US that's a little more behind in that, and I would attribute that to our geopolitical issues that we have here in the US. But yeah, Europe's way ahead of us on ESG investing.
And so there are some international ESG funds that you can invest in.
Correct.
I'm not sure I would invest in the Chinese ones, but then that's me. I don't think their environmental practices are up to speed, and they're building a lot of coal plants at the same time. But that's the information I've got, and it may not be entirely accurate. I once made a comment on here, and Jim McGrath had to correct me that the Chinese weren't really making much of anything, but they are making a lot of stuff in heavy industries. So, but heavily polluting industries also. But in terms of they don't make Apple iPhones; they just assemble them. Mm-hmm. They don't make high quality chips; they get them from somewhere else, and then they try to steal the information off them. So I'd be wary of China, and I know companies are starting to leave China for that reason. But that's the information I hear. It may not be completely accurate, but it might be. So is there a question I had, is there an overall body that regulates these or does research into it or says, yes, these are accurate as far as we can tell? And is it recognized, or is it kind of a loose, how do we determine that it's really true in terms of the greenwashing or what we're getting, what we really want to get? And then
Sure.
Eric's got a question too coming up.
Okay. Yeah, and Mark, I agree with you with China. We've actually dramatically decreased our investments in China. It looks like after COVID with the supply chain issues, the US really changed the way they do things. And now we're building those chips here. We're using Mexico as well for a lot of the things that we do. And so, yes, we're not big fans of China either. And to answer your question on sustainability authorities, if you Google, and I have this on our website too, USSIS, they're the premier authority on sustainable investments in the US. But also Morningstar, it has a section that's just for ESG investing. Vanguard has it. We already know the S&P has that as well. And so every major investment firm, if you go on their page and you look up ESG or sustainable investing, they're going to have a whole section that's assigned for just sustainable investing. And they'll actually detail how they pick their funds and how they keep greenwashing out of their funds. And so I have a bunch of links on our website as well to help people to figure out how to invest sustainably. And let's see what
Eric, you got a question?
Eric.
Come off mute.
I am. Mark, I'm just following up with what you just talked about. A number of years ago, I invested in a company. My wife and I invested in a company called Green Century. And Alex, I'd just like you to comment. Have you heard of them? And can you tell me, anything about them? When I read their portfolio of what they do, it sounded like they were a legitimate site, but I'm just curious to get your insight on them.
Sure. So Green Century, they're a mutual fund company. They're out of Boston, and I use them in our portfolios. They have a very good reputation, and so I would have no issue with anybody using their funds. They don't have a ton of options, so they have a balanced fund that year to date is up 5%. 1 year average is about 13%. And so they don't have a lot of options. They have a balanced fund, and then they also have an institutional share class as well. So they don't have a ton of options, but let's say in a Roth IRA where someone's investing, say $6,000 or $7,000 to start off in, you want to be in a balanced fund. And so I'm looking at their returns right now. They're in line with the market. They wouldn't be my first choice to go to, but I don't see anything wrong with them. And I do use this fund in our portfolios.
No, I appreciate that. Like I said, I jumped on this because I am concerned about the environment, and I wanted to look at other options. And our investment financial company is Edward Jones, and I share with our investor, our financial advisor. I'm really concerned about not investing in the fossil fuel industries. And so when I came across them, Green Century, I thought, well, I'll just throw a few bones at it and see where it goes. And it's not like we're, in the stock market to buy and sell on a daily or weekly basis. I look at it as a long-term investment, and I was just curious. So I appreciate your insight. Thank you.
Yeah, my pleasure.
We've got another question, sort of related to Ori Pennick's question. Do you do any teaching to groups?
We do.
So I was thinking about the marginalized community who don't get any help. I know that the IRA funding things and the Illinois CJA stuff has training and funding for people, but how do they learn about where to put their money if they start getting some?
Yeah, so that's something that we just recently moved our office back here to Evanston, and so what would like to do is to have these seminars and have them open to the public for whoever wants to come in and learn more about sustainable investing and give them options. And so we will be doing a series of educational seminars here in the Evanston community. And we have on my site, you can sign up for a newsletter, and we put out articles 2 times a month that talk about sustainable investing. And so we're offering it. There's options out there besides us as well that can educate people on
strangely silent. I have a question about fixed indexed annuities. I have some, as you know, and are any of those ESG these days? They weren't, but maybe now they're starting to.
Yeah. So
Usually insurance companies, but
yeah, the annuity companies, and when it comes to these fixed indexed annuities, they have been very slow to enter the sustainable investing forum. And so last I looked at, there are very few options when it comes to index investing annuities that are sustainable. There's a few out there, but not a lot. And so unfortunately, when it comes to annuities and indexed annuities, they're going to stick to the index. So if it's an S&P 500 index, they're just going to do that. And that's unfortunate. But at the same time, the asset flows that are going into annuities and indexed annuities is way down. So there's not a lot of new money that goes into annuities as well. So it's an uphill battle. We got to keep going on this.
are your slides going to be made available to the presentation to the people? I guess could be on the recording, I guess, and maybe they'll be there and it'll go out to YouTube. But
yeah, and I'm happy to send them to you, Mark. However you guys want me to send it to you, I can send you this presentation for people to look at.
If you would forward that to Mark,
Okay.
your PowerPoint slides, probably as a rather than a PowerPoint, as just a what's it called?
It'd be just a document, a Word document,
PDF?
or yeah.
PDF. So we can then share it to everyone that signed up as an RSVP, which is usually twice the number of people that we have on a call. So we send them out, and I've gotten 3 people during this call that said they could not, because of their time constraints, couldn't get on the call, but they would like to have the slides. So we'll send those out also.
Perfect. Yes, I'll send those to Mark, definitely.
Garrick's got another question.
Yeah, Alex, my wife and I are retired teachers, and it's always struck me that basically for the last 50 years, we've had technology for solar. But where do you see the future, the near future of our state actually pushing to have solar panels put on our schools?
Yeah, so this is just my opinion. I feel that Illinois, as we know, the budgets have been really, really pinched for many, many years because of their pension issues. I think the governor has done a great job with balancing the budget, but there still is not a lot of money out there for something like that. I mean, we're already behind just in hiring enough teachers for the schools themselves. So in order for that to happen, and again, this is just me talking out loud, I think that the federal government would also have to work with states to get solar panels on all public buildings, right? So schools, on all of them. And so it's got to be a combination of state governments, federal governments, and also corporations as well, donating, or maybe they give some solar panels at cost to make this happen. So, I think that this election in November, as we know, is super important, as all elections are, but especially this one in terms of the climate. And I do think if we could get our guy in and get control of the House and Senate, then we could see some really neat things come down the pipeline. Because at the end of the day, this is going to lower, if schools and public buildings and all buildings had solar panels on them, that would lower the cost of energy. So it's a cost saving mechanism for budgets all over the country. So it's a no brainer, but it does require that upfront investment where they have to be installed. And so, let's see what happens with the election, and hopefully we start to do these things that are, 20, 30 years behind.
Right.
Doesn't happen.
And with that comment, there was a previous person on the call that asked a question and basically said that a lot of communities can't, homeowners or renters, whatever,
Right.
they can't do solar for whatever reasons. But if our school district budgets don't have to absorb so much energy costs because they have solar,
Mhm.
that would affect everybody.
Yeah. I agree. And you could even extend that to, electric school buses as well. What are schools paying for these big monster buses to run on diesel when they could be a plug-in and be recharging at night when they're not being used? So there's all kinds of cost savings that are involved with making this transition, but also with electric buses, it's going to be an upfront cost,
Right.
to make that change. And so there's costs involved up front, and then we start to recoup that over the long term.
And we are seeing some school districts moving in that direction, reinvesting instead of buying new diesel buses. They are investing in electric buses, but it's not enough yet.
It's painfully slow, unfortunately. Yeah.
Well, thank you for your presentation.
Jim,
My pleasure.
Jim, and then Sonny.
Yeah, I just wanted to comment on Garrick's. What I went to my school board about a year and a half ago and suggested that they look into putting solar on the roofs, which they did, and they put a team on it. They looked at renting, they looked at outright buy, they looked at solar farms, and in the end, the best return on investment was an outright buy. Put the solar panels on the roof. Earlier this year, there is just like with homeowners, if you put solar panels on your roof, you get a 30% tax credit. Plus, with Illinois, you get the solar renewable energy credits. Beginning of this year, some of that is now moved over, and schools can take advantage of that. So, if you're interested in getting your school district, talk to them. There is, like I said, they decided the outright buy, put the panels on the roofs of the high school and the two middle schools, was the best approach. Not to rent, not to lease, not to do a solar farm, but outright buy.
Good to know.
Jim, can you include on this presentation any links that you referred to right there in regards to, approaching the school board meeting and offering links to sites that would introduce this concept?
Garrick, I would have to. It's just been a year and a half since I've talked about it. I don't remember.
Okay.
But what I can do is I go to all the school board meetings and I can talk to the financial director who ran that group for his information, and I'll get that to Mark. Okay.
I can give you
And
two
Mark,
off the top of my head. Garrick, if you go to the Illinois Environmental Council, they've got a bunch of stuff on this. And also the Citizens Utility Board is pushing this stuff too. And I think both of them are doing, trying to push electric school bus stuff. And there is funding in the Inflation Recovery Act, the IRA, and it's also linked to the CEJA, the Clean Energy Jobs Act. There's a bunch of money in there. Now it's rolling out too slow, but there are possibilities there for job training and all kinds of stuff. So I would, get involved with CUB. It's a great organization. The Illinois Environmental Council is good. We're going to have both of them on again. And so that's my 2 cents.
Okay. Thank you, Mark.
Yep.
Yeah, I think we just need to make the school districts aware of this kind of stuff, as I don't think that's something that's high on their priority to pay attention to. We do, but they have a lot of other priorities. So if we know about something, I think it's a good idea to take it to your school board.
Can I jump in here for a moment? For reasons having to do with unrelated to our group here, I traveled throughout the state of Illinois. We can't help but not see a great many wind turbines wherever we go, right?
Yeah.
Pretty common, but that doesn't necessarily affect the schools. So one of the greatest supporters of this, the Illinois Clean Energy Community Foundation, has in fact been funding this for about 15 years. Now, in the category of a journey of 1,000 miles begins with a single step. And for those of us old guys on this call, it's moving way, way too slowly. But the good news is that they are, in fact, funding these programs and have funded these programs. They're really small installations, 1 to 5 kilowatt. I mean, really tiny. And, they're giving small amounts of money, but they're basically demonstration and pilot kinds of projects that begin to demonstrate the value of this in areas that you would not normally expect to find because of limited amount of sunlight throughout the year and stuff like that. But I do want to emphasize that there is a website. It's called NWSOFA-Indivisible.org, where you can actually go to that. There is, in fact, a Cook County Solar School program listed there. So again, I think that the effort is anemic, but nevertheless, it does exist. And so I believe that it can, in fact, begin to gather a little bit more momentum. Of course, as Jim is saying, if you go to your schools and you advocate for this stuff, they are more likely to give it a closer look at this, particularly when they're doing some of their redevelopment of their schools now. And they're very sensitive to energy costs, of course. So just want to add my 2 cents on that story.
Sonny, is that Illinois Solar Schools? Is that a website?
Yes, Illinois Solarschools.org.
.org. Thank you.
Yeah, it's a little dated, but it does exist. And in fact, the Illinois Clean Energy Community Foundation, I think, is actually kind of not sure about this. I think they're kind of mothballing themselves. They've been a big supporter of a number of the activities that I've been involved in with a separate conservation organization. They're a great funder, and now they're a little bit less so now. So I'm not quite sure what's going on with there or who's taking over the fund. So I'm a ball of misinformation here. But I just want you to know that there is a history of this, and hopefully it can continue.
Did I see Sherry had her hand up? Maybe not. Okay, Mark, I'm going to turn off the video. We're just about at exactly where you wanted to be.
Yeah.
But why don't you wrap up, Mark, and I'll turn the video off then.
Okay. Well, thanks everybody for attending, and thank you very much, Alex.
Yeah,
presentation. It's always good information to hear from you and sort of get an idea where things are at. I know there's pushback from conservative communities that don't want to go into this, people like Jim Jordan and his ilk that are fighting this. But yeah, it's good to hear your presentation and see where things are at, and you'll send me some stuff. And if people want to find out about SRI and ESG, Alex, again, where should they go?
Well, they could go to my website, which is egeasri.com, and you can email me there. I have a ton of information and links that will help people to take their next step. So you can go to my website, again, egeasri.com.
Great. Thank you so much. Thanks everybody for coming. I think next month I'm going to try to get somebody on from Citizens Utility Board. I need an update from them and just an interesting